What we have for today is a very interesting topic, which is blockchain. 2 years ago, 3 years ago, blockchain was an enigma. There were a lot of doubts, and we thought it's going to be is it going to be yet another fad? However, what has really happened is that today, as we are here, there are a lot more examples that's currently happening, and many of the panel members here have successfully used blockchain in their banking transactions, in their applications. So we will quickly dive down to what the objective of the session is. The theme obviously is evaluating benefits of blockchain technology and its impact on banking, financial services, and insurance, developing a robust platform and regulatory framework to support blockchain. Industry has come a long way. Statistics, just roll out 2 statistics. Across the industry verticals, including banking and financial services, 82% believe that blockchain is going to be disruptive over the next 5 years. And specific to banking and financial services, about 95% feel that it is already disrupting, and in the next 5 years, it's going to be even more disruptive. Having said this, to me, blockchain is all about its existence on the internet, and there are 3 broad applications, and we'll touch upon these applications. Smart contracting, value transfer, and the third element is data storage. Without further ado, so I would necessarily dive down back into the questions. To make it far more interesting, we will be talking about use cases, and it will be very nice if you can touch upon real life examples where you have implemented blockchain. So my first question is to Ramana and followed by Namesh, is let's take a case related where blockchain has been extensively talked about and used in the space of payments, remittances, settlement, and let's also talk about peer-to-peer payment, P2P payments in the application space. Ramana first and then Namesh.
Sure. Good afternoon, ladies and gentlemen. Before I go into the details of what exactly happens, I think let's take a step back. And if we look at the last 25 years, every industry has transformed to even that extent that people who watch the new James Bond movie, Mr. Q is now a young man who says, I don't even have a computer. He replaced an elderly gentleman who has a big supercomputer which used to have supercars. So all the industries have moved, and unfortunately the payment processing has still been the same MT103s and the MT202s of the world forever. If you look at the new generation, these are the questions some of us are getting asked by our kids and other kids, saying, I can transfer flowers to anywhere in the world real time. I can send gifts via Amazon or anyone anywhere in the world real time. Why can't I send the same money real time? I mean, this is an eye-opener for all of us, right? Sitting in here while we talk about regulation, while we talk about hundreds of reasons why, the so-called empty messages are the important ones for settlement and so on. A customer sitting outside is saying, I can do everything on a click of a button, but not send payment. Why is it happening? So, I mean, this is the same case, and people who heard me in other forums, I keep repeating this and people make fun of it, but I'll do it again. Today, if you send payment from UAE to Oman, it takes, if you're lucky, 24 hours. If you're not lucky, 48 to 72 hours. If you're really, if you send it on a weekend, it takes about 4 days, 5 days. You can drive to Oman in 3 hours and literally go and pay and come back. 3 hours you can drive to Oman and give. Why does a payment need to take 72 hours to go? I think this was the concept we started looking at an erstwhile NBAD setup and as FAB in terms of what is the need we are addressing, and blockchain is where it comes in terms of addressing these needs, right? And I go back to simple things the previous distinguished panel spoke about. While you still need a word signature, while we're still talking about a need of physical presence, I think blockchains are going to completely take that away. Blockchains are going to take that away through your private keys, public keys, through your sharing of identity on blockchain, which Dubai government is doing, and so on and so forth. So back to the payment space, we looked at how do we connect our network to make it a real-time payment for our customers, who today, if you go back to put yourself in the shoes of your corporate customer, the customer clicked the payment, so the funds moved from his account, the beneficiary hasn't received, so where are the funds? Where are the funds? So if you go back to your corporate customers and retail customers and show them the benefit of this 24 to 48 hour cash in transit or payment in transit, I think we're going to revolutionize the way we deal with our customers, rather than sending them 3 lines of a Swift message.
Thank you, Ravana. Namish, you have some good examples.
Yes, good afternoon everyone. First I would like to make a distinction when we mention blockchain here, and it goes back to the question which was asked in the previous forum as well on cryptocurrency. The first major distinction is that we need to separate value transfer from message transfer. And all the use cases, at least what we have seen in the current market, are not in terms of real value transfer. These are business process optimizations you achieve through message transfers. So with that in mind, we also had a bigger challenge. We had already achieved our direct remittance service to, let's say, example, one of the corridors in Asia without blockchain. Customers were still promised 60 seconds payment, which was live. Because that was the toughest use case we took to experiment and identify and explore. So what is this animal called blockchain? What benefits can it bring to business? Because it's, after all, it's just a technology which is at the height of its curve, like we had cloud, big data 5 years ago. Though we feel it's extremely transformative, it was very important to see what is the business value and benefit you get out of it. Once we experimented, we realized the platform gives you that, the ability to secure, that the inherent feature of security and the trust establishing cryptographic design allows party A and party B to interact with each other without having an intermediary. That was a basic, it's a trust providing system. So we experimented on this, and then we realized that tapping on that live data, we could achieve from what business has already achieved in terms of customer experience. In the back end, it was acting as a catalyst to digitalization. So certain processes of reconciliations and settlements and having real-time reflection of your pre-funding, because typically it's a pre-funding model of balances, were available to business in real time. That made their life a little more easier. The distinction, so it is something which there is a lot of value. However, if you see the true value, the true radical disruptive value is when we will start playing with value transfer in form of some cryptocurrency 5-10 years later. But that's not something which we are doing right now.
Yeah, I just want to add something on that, and I think that's a really important distinction that Nimish made, which was making the distinction between using blockchain to transfer value and using blockchain to transfer messages. And I think, if you think of what blockchain is, it's just another form of databases, right? And you can use a database for any sort of banking service within the UAE, and there's no specific regulations that apply to using databases to perform back-end services. But once you get into the realms of transferring value, then you're performing a regulated use case. You're effectively issuing a unit of value that is stored in some sort of technological sort of platform. Then that's a regulated activity where you have to check whether or not what you're trying to do is permitted by the central bank. So I think what's really interesting, but what's really exciting about the UAE is that the people who are deploying blockchain, they appreciate the distinction between what activities aren't regulated and what activities are regulated. And so what we're seeing is we're seeing a lot of the interesting use cases in the unregulated sector, but at some point for blockchain to deliver its true value to the UAE, we'll have to see blockchain deployed in regulated sectors, and I think that will involve the industry working hand in hand with the regulators to educate them as to what we want to do and what are we expecting from the regulators, in terms of promoting confidence in this technology.
Thank you, Brian. I want to stay with you.
Okay.
Peer-to-peer is almost like 12-15 years old. We know PayPal came into existence in the early 2000s, right? and they always had a bank at the, both sides necessarily had to have a bank. But P2P in the context of B2B, with blockchain being the subject of interest, Brian, what do you think is the role that regulators should play?
Yeah, I mean, if you think of what role do regulators play in any industry, right? They're there to protect the consumer, protect the end user of that service. They're there to promote confidence in that marketplace or in that industry sector as well. And I think, the central bank reiterated both of those roles when it issued its digital payments regulations earlier this year. And I think when you're looking at blockchain, when you're looking at peer-to-peer payments, I think, or let's cryptocurrency, but we don't really want to talk about cryptocurrency, but this, when the central bank starts to regulate that sector, again, its role, promote protecting the consumer and promoting confidence in the peer-to-peer payment sector in the UAE. That's a key part of what the central bank will need to do. And effectively, it's a technology that right now, if you take blockchain out of it, you can do peer-to-peer payments without blockchain. It's a technology that would be regulated by the digital payments regulations that were issued earlier this year. When blockchain does become a back end for peer-to-peer payments, then there's an interesting question as to whether or not the current digital payment regulations actually cover use of blockchain for such peer-to-peer payments. But I would expect at some point the central bank will issue a decree or issue guidance on the use of blockchain for transferring value, because that's probably the most exciting use case, which we read headlines about every day.
I think dispute resolution in case of a dispute, I think that's the place when I think the problem would start.
Yeah, that comes back to promoting confidence, protecting the consumer. I mean, we don't really want to talk, we can talk about smart contracts and blockchain creating self-executing contracts, and there are some people out there who say, it does away with the need for an intermediary in these transactions, but I think ultimately it won't, because, particularly when you're dealing with regulated sectors, and if you're dealing with interbank payments, for example, I think for the banks that will use interbank payment systems that are set up using blockchain, they'll all need to sign, which will keep me busy, a traditional contract that sets out the rules of the road, that sets out sort of the rights and remedies of each bank against each other. And in the event there's a dispute regarding the payment or regarding the settlement on the blockchain system, I think the central bank would play an important role as an intermediary in remedying that dispute. So I think what blockchain will do is it will reduce costs. Obviously, it will reduce transaction costs. It may result in settlement systems no longer having to sit physically in the central bank, because the settlement systems will be distributed around all of the participating banks, with the central bank having a regulatory node, so it can still maintain visibility of the transactions. But yes, I still think the central bank ultimately will be the entity that people go to resolve issues, to resolve disputes.
I think the concept of an event not occurring doesn't exist. I mean, that's the reason blockchains are so powerful, right? If you are members of a blockchain, you have to close the chain. So it's either you have acknowledged, right, or the chain doesn't get closed. So the whole idea of you have created industries of people inside today who keep sending Swift messages saying, have you received the funds? And somebody saying, no, we haven't cited the funds, and so on and so forth, is all going to go away tomorrow, because you both are looking at same ledger, the same with your specific keys, which are your identifiers, and the chain doesn't close or the transaction doesn't finish if both of them haven't acknowledged. So I think the concept of disputes or settlements or hundreds of messages flying here and there doesn't need to happen.
Saif, this is for you. Investment management sector, you come from Abu Dhabi Securities Exchange. Blockchain can potentially be used to reduce costs with escrow and custody in the securities business. But you guys have done some very interesting stuff using a blockchain, and there is evidential support. Can you please talk about it?
Yeah, my name is Saif. I'm from Abu Dhabi Securities Exchange. Everyone hear about the blockchain, and still we hear a question, and visitor came to us, where is the blockchain? It's a technology at the end. It's in the back end. So we decided in ADX to pick one of the business function, the AGM meeting, Assembly General Meeting for the listed company, listed in ADX, and run that meeting using blockchain. So we talked to one of the strategic partner, and we developed an application AGM meeting running on blockchain, and it was successful. That experience gave us the knowledge and the know-how how to use the blockchain. ADX, it has many functions, many business functions, and it's all provided by system provider. So now in ADX, when the system provider like NASDAQ or whatever, when he comes to us and he decides to change one of this process to blockchain, at least we have the knowledge, the know-how, we can discuss with him how we're going to do it, okay? Blockchain is a distributed ledger. Now, we know from our experience, okay, what can be embedded in that ledger? What kind of data should be embedded to be shared? We know now the difference between hash key, what the node mean, okay, and what the process or the function or the business process should be, how it will be successful. 51 of the ledger should be banned that process. So this is our experience, and we are moving forward to improve it, to pick other function, other business function, and deploy it to blockchain.
Very good.
I think this is a great work done, where we go back to the previous panel where the distinguished speakers were talking about we have to mandatorily have a wet signature, to the whole e-voting. As a members attending the annual general body meetings, I am e-voting on blockchain, which means I am proving my identity somewhere that I am the right proxy or I am the right owner and I am participating in the voting. What else is more powerful than this? I think this is phenomenal. This is where we need to see the benefits of, we need to, as what Nimesh said, we need to segregate blockchain and cryptocurrencies and see the benefit of the so-called the internet of value or messaging or the so-called identity on blockchain. I think these are very powerful.
Well, I agree, because even in India, e-voting happens, but the underlying technology is not on blockchain as yet.
That's right.
So I think that would have reduced the transaction costs phenomenally. Talking about Nimesh, there's one school of thought that says blockchain is essential because it brings about operational efficiency. And also it brings down unit transaction cost. But what about the customer experience side? What is your take on how blockchain is equally important and kind of bringing about better quality of life in terms of customer?
So I think it's agnostic and transparent to the customer experience at this point in time.
Okay.
For a specific process you talk about. Currently we all are talking about permission blockchains. Yeah. For any, so if there's a private ecosystem you need to create. So if there is a business network or a set of people who continuously on a day-to-day basis conduct business, you have any digital asset which you transact on, and then you have a basic trust between them. Today we are not going into the public blockchain network. We're doing private consortiums. There's always some basic trust happening between them. What it gives you, the virtual data, secure data lake, a single source of data which everybody can tap onto it and digitize a process which crosses multiple entities. Today we all have done digitalization in our individual organizations. Fab must have a digital strategy, we have a digital strategy. Blockchain is very helpful and it's transformative when you have a process that cuts across all these entities. So I'm sure you're going to cover that. Payments is one use case.
Correct.
There are absolutely other use cases that can take advantage of this technology now.
Loyalty is one good example.
Loyalty, digital identity.
Yeah.
Digital identity is one of the foremost superior use cases for every individual, like Emirates ID, for example. Tied up with Emirates ID, if there was a digital identity which is issued on a blockchain, and you use that as a single source of truth to prove your identity and consume other services, that's the use case extremely useful and extremely important, which I think the government is already working on. There are, if you talk about, trade use cases, if you talk about any business process, complex business process, if you have the right support of regulation, can be digitized using blockchain, because you are tapping onto the same source of data in a more consistent manner. And that can really change.
Yeah, when my friend here talked about Swift messages, now I think the Swift message costs like $30 per each message, I think. By using blockchains and the application, the top of it, Rubble, I think they call it, this message might cost $1. So this is the difference.
The scale is. Brian, the previous panel there was one question on cryptocurrency. Now, obviously our focus is on the impact and the power of distributed distributed ledger. So, do you want to articulate the difference between blockchain, cryptocurrency, and the power of blockchain? Otherwise, although the underlying platform is blockchain even for cryptocurrency.
Yeah, sure.
For the benefit of the audience.
Yeah, really quickly. I think it's important to think of, we've talked about use cases of blockchain, and I think it's important to, and people sometimes think that Bitcoin and blockchain are synonymous or one and the same thing, but are not. Bitcoin, cryptocurrencies is just one use case among hundreds for blockchain. It effectively is a digital token that sits on top of a blockchain distributed ledger infrastructure, and then transactions are recorded in the blockchain. So it's really important to make that distinction. And we talk, as a lawyer, when I talk about regulation, I talk about regulations that apply to cryptocurrencies, separate to regulations that apply to blockchain. So I think that's really important. It's not to say that cryptocurrencies aren't interesting and exciting, and like making a lot of headlines in this space worldwide, but I think for the purposes of the people in this room, it's probably not the most interesting use case in terms of what's going to make a big change to your bank. And the more interesting use cases are the use cases that my fellow panelists have been talking about today.
Okay, good. I want to go to the third use case, and this is really closer to me. It's about trade finance. Currently, that entire industry is going through an upheaval there. So, but what continues to be plaguing the industry is the not so efficient use of capital and the time taken for transactions to get processed. So, neither the seller nor the buyer is getting benefited. So, I haven't heard of any successful deployment of blockchain in solving a trade finance related problem, Ramana. But do you believe that blockchain can play an important role in trade finance? We'll go with you and then we'll go with Namesh.
There are certain use cases done with MAS in Singapore, and I think ICICI and Emirates MBD has done a trade finance, if I'm not wrong. But fundamentally, if you look back at the trade finance oriented business, I have my view. The traditional trade, which includes the LCs and that needs a big documentation requirements, some huge manual documentation requirements. So today, if you scan a shipping document and send it, I don't think any of the bank would accept it till they see the physical paper. So I don't think traditional trade is where the blockchain benefits would come out, in my view, my humble opinion. The biggest benefit would come out in businesses like invoice discounting, supply chain finance, which are not the traditional trade but more of an open account trade. And when you do an open account trade, imagine the banks last year lost billions of dirhams in multiple fraud invoicing, where one invoice was submitted to 6 different banks. So how do we get in a blockchain, which is actually running case, not on blockchain, but is a running case in India, is a running case in the US, how one invoice gets registered, logged, value gets logged, and there is no way you can tamper or play around with that invoice, right? So those are the use cases clearly blockchain would absolutely take in. My personal view is, while there were many cases done on the LCs and LC related documentation, I'm not a big fan of it, because the bankers who are here, who are traditional LC processors, would not accept a scanned document or an electronic image.
But if
unless all the ports, shipping companies, all of them come on board and start delivering that message.
Yeah.
No, there is some initiative already on in Singapore. Singapore Customs Union and the government, they're coming together to establish some sort of a franchisee there. My assessment is if blockchain and robotic processing come together in the area of trade finance, it can make the case far more compelling.
That would not be a quick win in my view.
So in theory, trade finance use case is the best use case for blockchain. However, I agree with Ramana on all the challenges you have with the trade finance use case. In terms of creating that ecosystem, getting all parties from the customs to the ports to the logistic companies, not only in our country, cross country, to have it complete, to see the complete benefit. It would definitely, ease the life of a trader, a buyer, importer or an exporter. But to get to that level, to create that ecosystems and acceptance and adoption is where the biggest challenge is. And in that, we're not only playing technology challenges or business challenges, it's a lot to do with ego management as well.
Yeah. I think this is another area where law and regulation can help. So, I mean, I studied international trade at university. I remember reading all of those cases that gave rise to the current situation where you've got to produce every single document and has to match exactly what the other party's saying. And that's all being driven by people losing money or cases going to the Court of Appeal, to the House of Lords in the UK. A lot of these international trade agreements are governed by English law. It just happens to be the precedent that's arisen. So I think what would help drive international trade would be a judgment in the UK that said, yes, we can accept the provenance of documents provided on a blockchain system that is acceptable to the bank, that is, looking to finance this transaction. A judgment like that, I think, would transform trade finance and would transform the drive for using blockchain in trade finance. But we probably need either a law or we need a court judgment that makes that decision before we see trade finance use cases being fully deployed.
I think it should be more driven by the right agency within each country to push the participants to come across as in part of that ecosystem.
As a facilitator.
It can really change the way trading is done.
Fortunately, the government of UAE has been a great proponent of blockchain, and in fact, I think there's one of the very few governments in the world that's like advocating very strongly the use of blockchain. So we touched upon this question earlier in the session. Is again, for the benefit of the audience, I still want to reiterate my question is, what role do you believe that central banks and particularly the governments ought to play? We talked about creation of an ecosystem, but any specific thoughts, Brian and Saif?
Yeah, I mean, I've talked about it earlier. It's promoting confidence, it's protecting the end user. I think when we get into the realm of smart contracts, digital signatures, which are part of that, it's enforceability. It's promoting the fact that those are enforceable. It's not just a central bank. When you look at the different use cases for blockchain, if you want to do ICOs, we'll need ESCA involved to authorize that. If you're looking at Internet of Things, the TRA will play a role in promoting the legislative use of blockchain for that. So there's lots of different regulators involved. I think at the very top, if you look at the Prime Minister's office in Dubai, I mean, they're doing very exciting things. They've got a global blockchain council. They've come out and said we want all government records on blockchain by 2020. So they're leading from the top as well. So it's that combination of leadership and providing regulation and steer just to give people confidence that they can use this technology and they can rely on this technology and transactions conducted in this technology.
Okay, Brian.
Yeah, I think the blockchain will take some share of the ordinary software or application in the society or in the banking sector. Okay? I don't think it will be fully blockchain. Okay? But at the end, part of the system, part of the function, part of the processes will be in blockchain. This is the future.
Business process optimization is an expected process outcome of blockchain. When I started the discussion, we talked about the importance of value transfer and parties realizing the power of value transfer using a blockchain rather. So, in my assessment, value transfer, value exchange is going to become very important in the days to come. So, it may be a good idea if you can start, Brian, and then we can go round robin. and answer this specific question on the importance of value transfer.
Yeah, I think we've already addressed that. I mean, value transfer, in my view, is currently it's a regulated sector. You cannot use blockchain to do value transfer in the UAE without the central bank's blessing or guidance. The central bank, I mean, there was a lot of, in the initial version of the digital payments regulations, it said virtual currencies are prohibited. And that caused a lot of headlines and a lot of confusion. It then came out and says, well, they're not prohibited, they're not governed by these digital payments regulations. Now, last week there was a story in the National saying that the central bank is looking at developing regulations or issuing guidance on cryptocurrencies, and I think by extension you can take that guidance and apply it to all transfers of value within the UAE banking system. So it's hard really to talk about this until we see what the central bank has to say. What is positive, what is promising is it's looking at this, and it's hopefully looking at putting in place a legal infrastructure that permits this.
Okay.
I think it will happen in years to come. You cannot ignore value transfer, because that's a true value. And like countries like Estonia and Nordic countries, they've already issued, they may not probably, we cannot predict the future, but they may not go into those generally traded cryptocurrencies, but they may create a fiat currency or a fiat coin from a country point of view, like Estonia did. Estcoin is what they launched. Maybe there is a plan where central bank may launch fiat currencies such as UAE coin or a GCC coin, and that would probably tag it to a fiat currency and then do the value transfer that way, and then settlement or reconciliation vanishes completely.
Reconciliation, that's an important space.
Like RBI has already announced, they're creating a blockchain. RBI is the Central Bank of India, and they've already made an announcement of creating a blockchain platform connecting all financial services. And yesterday there was some news, I don't know, it's a rumor or it's a fact, they've also announced that they will work on creating a coin. Counter to argue against it, Canada, a consortium of 12 banks, 14 banks, launched a cat coin last year. They experimented, and then they made a call that I think we're not ready yet. So let's focus on the business process optimization, and at one point in time, we'll come back to Catcoin at a later stage.
The real value comes when there is a transfer of value. The real benefits of blockchain comes when there is transfer of value. Now, how does the transfer of value happen? I have my personal view on cryptocurrencies. I'll not talk about it. But there is clearly going to be a model where, and this is my hypothesis, maybe I can put an IP on this, there is going to be a virtual fiats, the so-called like the virtual dirhams, the virtual rupee, the virtual, which are going to be netted off on a real-time environment instead of an XRP getting netted off on a Ripple or a Bitcoin or an Ether getting netted off on a smart contract. So what you're going to have is you're going to have the virtual currencies coming in and getting traded more widely accepted across the globe. So you don't need to go physically transfer your or exchange your currencies, and that's when the real value would kick in. My personal hypothesis is, I will not call it cryptocurrencies, digital or virtual currencies are bound to stay and bound to transform the way we're going to deal in the years to come.
Yeah, I think that the central bank, they just launched the e-wallet, or they are thinking in the process of this is the real value of the blockchain. And I think also I heard that the central bank, they are working with the other bank to exchange the money through a system using blockchain.
Got it. Okay.
Moving the money from bank to bank, from account to account, using a system similar to blockchain, but it's in the way.
Excellent. I think just time for taking some questions, get some views from the audience.
We have two questions from the audience. If I can ask them to state their name, their company, and their question.
My name is Ahmed Al-Rafai from Al-Masraf. Indeed, thank you all. Very comprehensive information. And if the competent authority take the lead of implementing the blockchain, same what happened with Abu Dhabi security, I think things will move. Now my question specifically to you, Ramana, because you have a deep experience in transactional banking and cross-border payments. CLS almost failed. Pelero for trade finance almost, actually it's failed. PPO, only some of the countries still using it. How we can make blockchain successful? Because this is indeed, as you mentioned, it's fantastic for trade finance. Let's assume it is not for value transaction, at least for documenting exchange. What is the key things which would take to central bank or to the regulatory saying this is what we want, and how we can have those banks work together on one blockchain? My second question, if you will allow me, my second question is, if we have a blockchain for value transaction, how the central banks, not only our central banks, will control the flow of currency from one entity to other entity and prevent anti-money laundering, money laundering, sorry. Thank you.
I think you've hit the nail on the head, and that goes back to the point why I said traditional trade would not be a great example to start blockchain, because of the experience we have seen with BPOs and Boleros of the world. The reason why blockchain would be successful, or the critical success factors of blockchain, is unlike a core banking systems getting developed or a BPO getting developed internally inside a bank environment and then going outside, as an example, blockchain came in as a fintech driven initiative into the bank, into the industry driven, and then started hooking up the banks. Now, what will be critical success factor is for the corporates to come in. Till the time the corporates come in and start becoming the part of this ecosystem, as banks, I don't think we will take it for long. There is no long drive in that. This is when the likes of the big entities come in and then say, guys, I have 17 different locations. Now I want to net off all my positions on a real-time basis. And today most of the companies do. There are big names who already do a central clearing, right? This is not rocket science. I think the corporates coming in would drive the banks to come into the environment, and corporates sometimes can force the banks to come into the environment, and that's the only way this can grow. The second point to make it successful is we should move out of our pilot, his pilot, their pilot, and X pilot, right? This goes back to the example of when internet started. Before internet started, there were many small-scale intranet-based initiatives done, and everyone used to call it our proprietary few computers inside a network. Then TCP/IP came in. They didn't say we're going to connect all of you. They said we're going to give a layer on top of you. You can do whatever you want to do below that, but this layer is where the people on this network can talk to people on this network. I think that's where the pilots today will all come together, and all payments initiatives will come together, and so on and so forth. Second question, the digital currencies, and that's the reason I was very diplomatic, very clear when I said not cryptos but digital currencies. The reason is when you launch your digital currency, you can link a customer ID who owns that digital currency. So the customer identity and the digital IDs have to go hand in hand together. So you should know if I release 50, how can it go?
One more question?
So we have one final question, please.
Yeah, hi, Najwa from Samba Bank in Dubai. I think it's very important not to ignore cryptocurrency in this region, especially after the introduction of 1 gram, which is Sharia compliant and backed by gold. Cryptocurrency. So they have 1 gram cryptocurrency, which is going to be launched soon, and it's actually backed by gold and Sharia compliant. My question to you, what do you see, how do you see cryptocurrency will affect banks, and the way the banks work within the next 5-10 years in this region?
A question to me. There's a question whether cryptocurrencies will be permitted in their current form, right? At the moment, and it comes back to the question, are cryptocurrencies actual currencies, or are they crypto assets? Exactly. Or crypto commodities, more like gold, rather than currencies that are used for like buying and selling goods and services in the shop? right now I would be hesitant to launch any sort of application or fintech product that lets you use cryptocurrency to buy and sell things in the UAE, because my view is that's prohibited by the digital payments regulations. What's more interesting, whereas what I think you'll see happening, is the cryptocurrency technology to create crypto assets that get traded, such as 1 gram, such obviously if you look at, cryptocurrency exchange, well, crypto asset exchanges in the UAE, you have BitOasis, and it acts more like a gold or a commodities exchange rather than sort of somewhere that you're using crypto assets to buy and sell goods and services. So I think that's where we'll see the development. We'll see basically crypto assets like Bitcoin being traded on exchanges, and that may be something that the Securities and Commodities Authority might want to take a view on and regulate rather than the central bank. But until the central bank comes out and says it's okay to use cryptocurrencies to buy and sell goods and services, we won't see it happening in the UAE. And it comes back then to the point made earlier. What we may see from the central bank is some sort of fiat cryptocurrency, of which it has complete oversight of every transaction that is made using that. Possibly see that first. But I think, so I'd say, if you're talking about Bitcoin, Ethereum, that sort of thing in the UAE, and you want to do something with it, call it a crypto asset or a crypto commodity. Don't call it a cryptocurrency. Yeah.
All right, guys, I think we are pretty much done for the day and for this session as well. Over to you. Thank you so much.
Ladies and gentlemen, a big round of applause for our moderator, K. Srinivasan. Thank you very much indeed.